Good evening, everybody. The Chinchilla Pick-In Podcast. It is December 28th, 2021. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Good evening, guys. My name is David Underwood, as always, and I am not here with Brandon Beaver this week. No, we have a fill-in guest, and this time is someone who's already been on here. We have a repeat fill-in guest. We must have done something right. Nick Young. Nick, how are you doing, man?
I'm doing well, brother. I'm doing well. It's good to be back. I want to apologize if anyone's sending noise in the background. It could be my puppy, my fiance and I just got, so he has a tendency to bark a little bit. So if you hear that, that's probably the cause.
Nice. I tell you what, last time you were on the show, I had a couple people like my daughter and some of people she knows said, "Oh, is that Nick Young from Crazy Rich Asians?" I was like, "No, it's not that Nick Young. Sorry, he does not own all of Indonesia there or Singapore or whatever."
The other question would be if it's the basketball player. A lot of people have asked me and give me the old joke is, "Oh, you play in the NBA?" I said, "Oh yeah, that's my weekend gig."
That's what I do part-time, right? Yeah.
It's a hobby.
Yeah, right. There you go. Well, anyway, no matter what, I'm happy to have you back. I'm happy to have you fill in for Brandon. He's in sunny Florida. Hopefully it's sunny right now. I don't know. I haven't checked the weather, but he's in Orlando. So
You'd say that, but I feel like the irony is like as you're saying it, it's just like downpouring.
I hope not. I hope not for his sake, man.
I hope not too, especially not like the run.
Yeah. That run was so. Yeah, we talked about the run last week on the podcast, and you were a part. Oh no, 2 weeks ago, and you were part of that run. It was that was rain. That was a lot of rain.
I hobbled it, but
Yes.
yeah, it was a lot of rain. You got to head out to the bridge for a little while, but I kept trudging through it, trying to catch up.
Anyways, well, it's the last podcast before 2022. So I know going into the show, I got a couple things I want to look at going into 2022 and some other things. We, as always, guys, just so anybody's listening, rules. Nick and I got together about 5 minutes before the show. And we told each other what we're going to talk about. We did not discuss it. We just saved the live discussion for here on the show. One thing I failed to mention to you, Nick, was I was going to cover some of the viewpoints of what I'm looking forward to going into 2022. I did tell you that I would have, huh?
You're leaving a surprise out there for me.
I know, right? I gotta shock you. Yeah, since you're a regular guest now, I gotta keep you on your toes. And then also I do have one call, which I did tell you that I will have a call for 2022 and something to look at. But you are a guest, sir, so you will go first. I'm gonna leave the floor to you, let you take over, and let you lead the discussion for the next little bit.
All right. Well, you actually set me up pretty good there because the thing I want to go into really first is 2022. I think the question that a lot of people ask when you're looking at it is, especially next year, it's an election year. What factor is that going to have on stocks in the market? And I think to that point, I would expect a lot of turbulence next year, a lot of give back and forth, a lot of that being caused by election. Main reason being until after I believe it's the second Tuesday or the first Tuesday in November, one of those. That's when you have whoever's taking over. This year will be the House and the Senate likely. So I believe there's going to be some turbulence more towards the middle and later part of next year. So interested to see how that's going to kind of pan out. And what effect that's going to have. I think there's going to be 2022 and then going into 2023, some potential gridlock there that could affect stocks. But really excited to see where 2022 is going to go. But I definitely see it being a turbulent time with election years. What's your thoughts kind of on that, Dave?
On elections, with the amount of money that's been pumped into elections lately, media companies might be a good buy ahead of elections, about a month or two ahead, and just because they're going to report their poll-ins afterwards, and so it's a swing trade, longer swing trade than I prefer, but it's a swing trade that you play, and then after they report, you sell because it will take a nice little surprise quote unquote jump afterwards, and you hopefully come out with a nice winner there.
Gotcha. Yeah, I mean, I think 2022 I think it's going to be an interesting ride. I'm hoping it's better, smoother than 2021 and 2020 for that matter. So hopefully we can have not 2020.2, but actually 2022.
Well, I mean, here's a couple of things, man. Since you're saying there's going to be gridlock and people are going to be unwilling to jump across and vote for things that could be quote unquote troublesome during their election, you might look at things that are in this bill, the Build Back Better bill that is stalled in the Senate and is not going to get past the Senate court that we've seen recently, and companies that we have bought thinking that would get pass, and now that it's not going to pass. Do you still hold these companies? Do you get out? One thing that came to mind for me, but this was part of the infrastructure bill, was BLNK charging. I actually still think BLNK has a good future, but if these bills don't get passed that have money allocated for BLNK, that does hurt them in the short term. But in the long term, BLNK's still a good play. I just don't know if these bills aren't passing or nothing gets done that you see any real movement in BLNK then next year.
So BLNK is one. I actually, when I did the pre-work, I said I was going to bring back a oldie but a goodie that you talked about earlier on the show.
Nice.
Which is BLNK, and I'm going to go to a little bit more depth on that later. But I think to that point too, I think the Build Back Better is going to, at this juncture, since it has been pushed prior to the end of 2021, and now Congress is no longer in session, I think it's going to die. Yep. I think too many people are going to be protecting their ability to get reelected next year. So I think the Build Back Better is done. So I think to that point, if there's stock companies that you were buying in the intent of them getting money from the Build Back Better, I say in my personal view, I'd say they're probably not worth investing in at this juncture and finding better areas to allocate your money.
100%
so
agree.
I think that's a dead bill. So, but BLNK, so you kind of brought that up, and I'll roll that into something that kind of goes down the same road that you brought up, is energy. So I think as we go into next year, I think energy is going to be a hot topic. I think there's going to be push for more green energy. I think a lot of concern is out there with things being pushed through, and I don't want to take things too politically, but just from a government standpoint of pushing things through that are green-based bills, if you will. And so I think some of that will get pushed through next year prior to, because I think that's an area that most individuals consider, I don't want to say neutral, but kind of neutral. So I think you'll have some passing there, and I think BLNK's going to be a benefit of it. Granted, long term, we'll see kind of how that pans out. I agree with you. BLNK is a good investment. I actually have BLNK. For some reason, it was sitting there for some reason. I was like, why does this sound really familiar to me? When I was looking at it a little about a month or two ago, and it clicked that it was the podcast. And ironically, I didn't have time to invest in it when you originally started talking about it, because I bought a house this year, I got engaged this year, I got a dog this year. I spent a lot of money. So I didn't get a chance to buy into it when you actually talked about it, which I'm kicking myself over, but very excited to see where it's going to go here in the future. But you also brought up oil earlier before we got on. So what are your thoughts kind of on oil and where that's going?
Hold on. Before we get into oil, man, I do want to mention, so my daughter owns BLNK. Well, she did own BLNK in her trust that I run for her. And as we drive around to different places, and just random parking lots, big, huge parking lots. You'll see at the end of these parking lots, there's all these charging stations. And I always point out there, I'm like, look at the name on the side of that charging station. She's like, BLNK charging. I'm like, yes. I'm like, and they're starting to pop up everywhere. And so BLNK is going to be the company leading the way. Now, are there going to be other companies? Yes. Does it mean BLNK is going to be the company going in the future? Who knows? BLNK could be out of business in 3 years. Anytime there's a new sector of the economy and a new way for companies to make money, a lot of companies start up, a lot of companies join it. There's usually one or two leading the way. It doesn't necessarily mean those one or two leading the way is going to be the ones that finish the race either, though. So you don't know. Right now, it looks like BLNK is the clear winner in this sector of the economy. It looks, because I see them everywhere I go. in the United States. When I've traveled, I've seen it everywhere. Blink is the clear winner right now. I with just their infrastructure in place and the deals they're signing in Europe right now, I can't see them going out of business in the long term. I see them staying one of the top one or two going in the future.
Well, and I was reading on them too, and I'm pretty sure they're doing kind of like a franchise-esque pieces with their charging
Really?
stations and the software. And so
Wow.
I think that will be interesting. And I want to say that's correct in reading it, but I had to follow up on that again. But yeah, I mean, if that's what they're doing, where you're basically, yeah, you're fronting up some money, but somebody else is fronting up a larger portion. I'm excited for where their potential business model ends up.
So you're excited, but here's my question I have for them, since this is news to me. And I generally try to keep up on news on Blink, so this is news to me. I'm surprised I missed it. My question is, A, is Blink doing this to try to expand at a better rate, faster rate, and maybe use other people's money to do it because they see that franchise models work via McDonald's and so on and so forth? Or B, is Blink low on cash and they need this to expand and meet the demands that are out there?
Well, I think to that point, I mean, I'd be curious. I mean, that's the kind of stuff where I'd love to like read. I guess I'd like to read the contracts on what's being signed personally, because there's so much that you can get out of reading those. But yeah, it would be really cool to be able to see what's going on there, what's driving it, and really ultimately where that's going to be going. So yeah, I mean, if that's the case, like I said, I had to verify that. But you got to think too, where these things are popping up. I mean, you're popping up at a McDonald's, you're popping up at Walmart, you're popping up at one of your old favorites, IKEA.
Yeah.
It's really kind of interesting what impact this is also going to have, because all those places, I mean, with electric vehicles, you have to have them. I don't want to say you don't want to charge them all the time, but you're having at those places and people are going to start, they're going to use it. So I think too, they're part of that franchise piece is like a Walmart basically leasing. I would not initially leasing out the space, but basically, I don't want to say buying the stations either, but holding them there for that site. So I want to say there's probably some money they're getting through that as well. But yeah, I'm excited about Blink. I think Blink has a lot of potential. Yes, it's taken a little bit of hit in the recent kind of the recent time, but I expect a long-term kind of lift off from that. So
Okay.
Very excited where it's going to go.
Yeah, and Blink, one of the things Blink moves with is oil, because electric vehicles, oil goes up in price. Electric vehicle companies seem to go up, or Blink will go up because people are like, "Oh, oil's high. Let's go buy a Tesla now." That's not really how consumers work, but for some reason, that's how retail investors work, and stocks move. I don't get it, but sure. Go to oil. All right. So I've covered oil before, right? And I've covered it numerous different times. I pause to take a breath right there, because I'm trying to figure out how I want to start this, because I have a number of different bits of information here. So let's talk about barrels of inventory, right?
Well, and the funny part on this too, Dave, by the way,
Yeah.
do you remember we were talking about the last time I was on the show?
Was it oil again? Yes, it was oil. Yeah. I do. I don't know why. It's something about you coming on that I just like to cover oil. So let's go to crude oil inventory. So that's what we're going to talk about right now. Last week, crude oil inventories were down 4.7 million barrels from the previous week. What that typically means is that either companies or consumers are using more, and thus inventories are down. So that should usually, if there's less of a product out there and demand is high, it usually makes the price go up. That's how it works. That's why oil has gone up, and you should have seen a rise in oil stocks, which for the most part, you generally have. One other thing I look at is the Baker Hughes rig count. You can find this on bakerhughes.com or rigcount.bakerhughes.com. It's easy to find. They have it up there all the time. A lot of places, a lot of companies source this as information on rig counts. So from December 17th to December 23rd, that we added 7 rigs as the US, as a country, right? Now, the change from last year at this time is we've added 238 rigs from this time last year to this week, and it's currently sitting at 586 is our current rig count. Now, the time you're talking about when we covered this back in the day, I was talking about the anomaly, how there were so many different rig counts and how it went from like 800 down to 500 in 1 month. And then we found out that it was the Biden administration cutting any if you had any kind of paperwork in the system for a rig count, the administration said, nope, say no to it all. And they cleared out the system. And the rig count dropped tremendously in 1 month time. And that was due to that event. I didn't know that at the time, but a couple months later, we figured it out, and I reported it back here on the show. So because rig count dropped, inventories dropped, and demand was still, it was recovering from the pandemic at that time, but it was still high. And that's why you saw that dramatic rise in the cost of oil during that time. Oil went from, I think it was like $40 a barrel all the way up to 70, 80. And people were like, oh, it's going to go to 100. It didn't go to 100. Well, so that those calls were wrong, but that explains the movement in this. Now, have we returned back to pre-COVID, pre-pandemic levels of 800 plus rig counts? No, in the United States, we're still sitting at 500 or something. So we're not pumping out as much oil as we used to. So we're still sitting low on that, which is why inventories are sitting where they're at, which is why the cost per barrel for West Texas Intermediate is still at $74 a barrel and not lower, which is not bad if you own an oil company. It's also not bad if, you're investing in some of these oil, not directly an oil company, but a company that services oil companies such as Schlumberger. Good company to invest in, right? Here's my question is, will these be good companies to invest in go in the future? Well, to answer that, I'm going to look forward to a couple of things. Tomorrow, you're going to have the EIA Petroleum Status Report weekly change come out every Wednesday. And what I'm estimating here is I'm hoping to see the barrels in inventory either stay down and stay suppressed. I'm not looking to see them jump up, and that's because of the holiday travel, because of the need and desire from airlines to get caught back up. I see them using oil right now. I'm going to still to see that suppressed, because that's going to stay suppressed and inventories are going to stay low. The cost of oil is going to stay right where it's at. So because I know this information, right, taking all this information into account, blah, 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 boom, put it in my brain. What am I looking at? I'm looking at RIG, right? Transocean. And I'm looking at Transocean right now is dipping below $3 a share. And to me, that's a good buying opportunity. Now, I want to preface it by saying this. I'm not calling an investment in RIG. I'm saying this is a good day trade below $3 a share right now during this current environment. And that's what I'm saying. So RIG, take a look at it. It should move after the EIA report gets released tomorrow morning. What do you think? What's your thoughts on everything I just covered so far?
Well, I think oil's been a tricky game lately. There's actually one thing, and I'm trying to remember when it was exactly, but it was recent when the Biden administration basically, I want to say they unilaterally did it, where they increased cost for drilling on public land. And I want to say they actually increased cost for oil companies about 50% too, which is also probably having some impact on some of your costs there, because when you look at it, if a company is paying more, I think you know this as well as I do, Dave, who's the one paying that cost?
Yeah, consumers. It gets all passed back down.
Exactly. So at the end of the day, it's insane to think that they're doing it, but I think it also has that effect on that oil. I hadn't also ever heard of the what did you call that? I had it pulled up here. The Baker Hughes rig count.
Oh, really?
I'd never
Yeah.
heard of that before. That was an entirely new thing for me. And I think that's really interesting to see that we're off by almost 300 rigs. I actually had it pulled up here with, let me pull this up real quick.
Yeah,
To your
once you
point,
start delving into that data on all these oil and the rig counts, I mean, you could go deep, and there's all kinds of data there to really get into it and figure out what's going on with this, what's going on with that. And to your point, the cost of doing business. That's why you see Apache pre-pandemic level was $40 a share, but it's only hanging around 29 right now. These companies are not going back to pre-pandemic stock prices. They are staying suppressed and lower, and they're not reaching back to those levels.
well, and part of that too is you're getting the price per barrel to go up, but you're not getting the volume moved that you normally would, which, as anyone knows, okay, you get the price, but what really is that kicker is that volume.
And
So
I
if
think
you're,
you did. I think you did this past holiday season
Mhm.
because at least in the United States, I can't speak for globally, but in the United States, you did this past holiday season. We saw pre-pandemic levels of bookings for airlines, for hotels, we saw it for. It was granted it was only for a 2 week span, but we did see it.
But you'll see a delay too on not until that stuff starts hitting, which to your point is happening now with holidays, with everything going on. Then you'll start seeing more barrels get moved. But looking back at 2018, I think this was December 28th, 2018. So exactly 3 years ago, actually to the day, that's crazy. Exactly 3 years ago to the day, there are 885 rigs, 900 rigs operating. So you're almost just over half at this juncture from what it was 3 years ago. That
Yeah.
is insane. And so that's going to have that major impact there. And when you look at where we were, our all-time low during the pandemic, you were at 172.
I have a feeling after we're done with the show, you're gonna go on the site and just keep digging because you're getting you're starting to get into the data right now, and realize like the what I've been talking about. And when you see these big drops, Nick, like I saw that big drop last year, and you don't know why. You just don't see an explanation for it in the economy, and you start investigating. That's when you start finding out about okay, what's really pushing these drops, what's pushing this going forward. That and then you can start actually understanding how these things work, how the rig count works, how oil moves, and then you can really start playing it. I mean,
I mean,
that's why I'm calling Rig. That's why I'm calling RIG, man.
it's fascinating because you go all the way back to 2014. You know what the max was in 2014?
400.
1,600 rigs.
Whoa.
So you're dropping from 2014 to last year 1,300, I'm sorry, 1,500, 14 to 1,500 rigs. That is insane.
That is insane.
So it'd be curious to see, to your point, in regard to price and keeping an eye on this stuff, the fluctuation of gas price and volume. I think if all of a sudden you start seeing rigs open up, and I think even when you start seeing them up, price is going to hold there for a while because demand, as we talked about, is going to be there. I think you're going to start happening. You're going to start having lanes for airlines open back up. You're going to have people start traveling. I believe Brandon said he's going to let everyone know how full the plane was when he comes back. Which with Omicron, I'll be curious if that had any impact because I know when I was traveling last year, late last year, and the early beginning of this year, by the early part of this year, planes were full. So it'll be
Yeah.
curious to see what Omicron had as an impact, and also if that would affect any of this. Because if planes are full, you're going to see more flights, you're going to see more lanes opened up, you're going to see things starting to get back to normal, which means you're going to start seeing rigs open up. To your point, I think that's a good opportunity for the future, assuming hopefully no crazy unilateral political things pop up out of nowhere.
You never know about those. I had a buddy who played an option one time, a very risky option, which I advised him not to. I said, I wouldn't do that. With $1 million of somebody else's money. And he went ahead and did it. And then news came out like the very next day about it was Hillary Clinton was Secretary of State the same at this time, and news came out the very next day about Hillary Clinton in China and something else, and that company just tanked. And I was
I thought
just like,
I thought you were just gonna say that she became Secretary of State and it tanked, but
no. But it just, yeah. And I was like, man, see, that's the risk you take though, man. That's why I don't play options. I like stocks. Every now and then I do an option. Usually it's one that I'm 100% sure about and 100% positive, confident about.
your options typically when you do them, if I'm not mistaken, too, is a lot of your day trading. So if you have an
Yeah.
option, you usually don't hold on to that very long. The only one that I know
No.
that you held on to was that BP trade, which yes, I will bring that up again for the second time on the show. I will always bring
But
that one up.
well, I mean, that one also was a long term. I knew that going into it that I was going to hold this for a little bit. I bought it 9 months out. I planned ahead of time. It was hard not to pass up when you have I think it was BP or ExxonMobil, but they were sitting at $30 a share, and it was a $60 a share price for 6 months later down the road. Which by the way, it actually did hit. It went over. It was like 68 when it crossed that strike point. If I would have held, but I bought the options for like pennies per option. It was just ridiculous the price I got, and so it was well worth it.
Yep. To that point, you can make some money in oil.
Yeah, yes. If you can follow it, right? If you can follow it.
Well, and if you are aware of the Hughes oil rig count, that also helps.
Well, now you guys are rigcount.bakerhughes.com. It's easy to go and see and find. It's talking about that and transitioning over to airlines right now. So I went through some of the major airlines here, and I got their stock price around 3:30 p.m. And I had to write down the time and everything just in case anyone's checking me here. Delta Airlines at 3:30 was at 39.65, American 18.50, Southwest 42.35, United 45.30. Basically,
and Dave, by the way, for that, you'll always know that I'm checking.
right? And basically, all of them, when I went back on the 5-day chart, they all had similar 5-day chart. They were up on the 5-day. And it was because that very first day of the 5-day chart, they were low and they moved higher. So I went back to all of them, and I went back over to 10-day and the 1 month and so on and so forth. And what you're seeing is there is a lot of volatility in here, but every single time in the past 3 months, 3 months, I have to be correct about this. I just looked at them all today. Anytime there was volatility and it dropped down, it went right back up. Now they haven't moved up from those top levels where they've been at. So like Delta was like capped out at 41, 42. American was capped out a little bit below 20. They haven't moved much past those levels at all during that time, but every single time that they've dropped, let's use Delta, for example, Delta drops down to 37. It seems to always go back up to 40 or plus. And I've noticed this, and I'm like, so my question is, when you see news like last week of, these airlines canceling flights and, yada, 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 and we don't think we can fill this, and there's problems at the airlines, and the airlines dip. Right now, that's looking, based on historical past 3 months, it's looking like a buying opportunity and a time to get in and make a quick day trade. Is this going to continue that pattern going forward? Maybe, maybe not. Maybe it was the strength of the holidays that made everybody confident. And come January or February, we're now relying on business travel to stay consistent in order to keep them moving and keep them profitable in that regard. But I don't know. I mean, I think with it, as long as the economy is allowed to run and is not restrained in any way, then I believe that they'll be hanging around these marks. Delta should move a little bit higher because Delta's a strong company. They're one of the few that could have got themselves out of the pandemic on their own without any government help. So Delta is definitely the strongest of the bunch.
So they're the Ford, is what you're saying, of
yeah,
I believe it was Ford. Yeah,
yes.
Ford of the car company.
Yes, Ford of the car companies. So I mean, Delta definitely looks like the cream of the crop here as far as staying profitable and position themselves correctly to move forward. Am I saying always buy their dips? No, because sometimes there's good reasons why they're dipping. So you have to do your research. But if you look back historically or the past few months, every time they've dipped, they've gone back up. So, take a look at it. That's something to view. That's something to watch, because anytime you find a sector like that that's moving in sync, I mean, if you look at their charts, you could lay their charts all up on top of each other and they're moving in sync. And
So
if
I
go
actually
ahead.
have American Airlines, and I watch Delta, and so I've seen the exact same trends you're talking about. 100% seen them.
Yep.
What I would say, so one of the big things I noticed is like Omicron came out, and obviously you saw the dip.
Yeah.
So I think that has more of a overlying impact, if you will. It's not necessarily officially impacted, but it is from a standpoint that like it's kind of like the boogeyman under the bed, in the essence that everyone's afraid it's going to impact the industry, but at this point we don't really know because we haven't seen the numbers. We'll know more when Brandon's back next week. But
Right.
to that point, I think when you're looking at it, I think long term airlines will be a good investment because once things get back to normal, once things start to normalize, there will be some positivity there. Now, granted, how normal and how long, that's a great question. I don't think anyone has an answer for that yet. Could be after the election, it could be 4 years down the road, could be 8 years. I think South Park made a joke that it would be sometime when I think they're fourth grade in it, when they're in their 50s is when it finally ends. So still kind of a giant question mark on that part. But I think also to that point, it is also a good short-term investment. I think airlines are ones that do just kind of fluctuate up and down. Just if you do catch it, I probably wouldn't do any day trading around reporting. So anytime that they're reporting numbers, I would probably be careful around that. But just day-to-day trading, I think there's some good opportunity there.
Oh yeah, 100% agree. And also because the pandemic, a lot of the airlines got rid of their older planes. And so they got to re-up and get newer planes in and get rid of, they use it as an opportunity to dump old hardware and get new ones and have the government bail them out and pay for it basically.
And what two stocks would you say are good options with that being the case?
Now, see here, I don't know because now Bowen recently we talked about, Brandon and I talked briefly for like 1 or 2 minutes on this last week about the news coming out of Italy and the company there selling them bad parts and they can't use. And is that going to mess up their whole supply chain? And where are they going to get these parts filled now that the company is being sued by Bowen? It's, I don't know, man.
But on that, I think they still have time on that. I wouldn't be too worried from that perspective. In regard to the bad parts, there'll be someplace they can always go. There'll be it may mean that instead they're going to buy parts American, and I'm okay with that. The other company I'd call out would be GE.
Yep.
Local company, small company, very small. GE. I think GE is a good option. They actually have taken a little bit of hit. They actually did a buyback program earlier this year because I remember looking at them and I was like, all right, they're sitting around like 20-ish, $30. And then like the next morning I woke up and I was like, I'm sorry, when did GE go to $100?
Yeah.
And I did some research and they did a buyback program and they just recently actually dipped below 100. But I think to that point, with their engines and whatnot, they would be a good opportunity to buy and have some growth on. So, I mean, as you know, I'm much more of a long-term trader than you are. I'm somebody who usually sits on it for months, potentially a year at a time. Whereas I know you're antsy to hold it. You like to, in my opinion, you like to do a hot potato. I think for you a week is sometimes too long, but
yes, I'll agree.
To say to that, there's some positive to that because you've been very successful. So
and there's positives, there's pros and cons to everything, man.
Mm-hmm.
My way is very risky. You have a high chance of losing your money because if you don't know what you're doing and you haven't done it for a while, guys, I've been doing this for over 15 years now and know what I'm doing. All right. If you don't know what you're doing and you're just trying to play it and be risky with it, then yes, you can lose very quickly. It can go to zero in a heartbeat if you don't know what you're doing.
That actually happened to me, by the way, with one, and I believe I want to say it was Rig, it was Transocean or one of those, and they were sitting low, and they filed for bankruptcy, and not knowingly, I figured, okay, this is going to be positive for me. It wasn't, and I found out the hard way. But that's what experience comes from too over that time frame. Is you
on a side note, man, I believe that's when you were doing the shipping carriers, and I just rolled my eyes every time you told me you were doing like dry ships and tops and all them, and you were playing those.
I did one or two, but
I rolled my eyes. I was like, why?
It was one or two, which right now actually would be I'm curious. I haven't really looked at those right now with everything going on with ports and whatnot, with ships not being able to move. I feel like that's a negative thing, but at the same time, they can charge whatever they want. So I feel like opportunity is there with detriment. So I'd be curious to actually look a little bit more closer to that. But yeah, I think airlines are going to be a good place to go. I think they'll be a good thing to keep an eye on. And long term and short term, I think they'll be good. I do have one more topic though.
Go ahead, man. We got finish this out with your last topic, man.
So this one again, holiday season. I'm very interested in it. I know whenever I go out shopping around the holidays, I always pay attention to what's going on, or I try to. And obviously, last year, brick and mortar stores terrible, very low numbers, just ugly. I think you're going to see a very positive result from Q4 for some brick and mortar stores. One that I like and I've been keeping an eye on has been Macy's. I was actually in there a couple of times during the holidays this year. I feel like every time I was in there, it was full. I like Macy's. I think Macy's is a good opportunity. It is also, I feel like I'm talking a lot about Cincinnati-based companies lately, but Macy's being headquartered here, I feel a little, I guess, pride. I didn't know that for the longest time that I was here, but
Yeah.
I feel good about it because if you compare, and a lot of times they do, for last year's numbers to this year's numbers, I think you're going to see a large bump out of the stock.
Now, here's the interesting that you bring that up, because tomorrow, you have retail future inventories reporting tomorrow. So that's something to keep an eye on, whether or not you're right about these brick and mortar stores. And they also reported that brick and mortar stores did a lot better in states that did not have any kind of mandates or
No
guidelines.
COVID protocols.
Yep.
Yeah, and that's, I think, honestly, the positive. And I mean, you do have places like California where things were still very stringent, which is a large portion of the population. I don't know. I still feel comfortable with the numbers in relation to last year. Just looking at just the difference year to year, I feel like even though COVID obviously was the factor and whatnot, I still think the number is going to be better, and it should drive some positivity. The other one I actually was really interested to keep an eye on, and I'm interested in it because of actually something you've mentioned on the show on several occasions, is Best Buy. And the reason I mentioned that is because a lot of what their products have chips. So when you look at, I saw your eyes going there of like, where's he going with this? I'm kind of terrified. So when you're looking at the fact that there's limited product, but I still think like every time I drove by a Best Buy, they were always full with their lots. They always had people there. So
I know, but you also got to keep in mind what state you're in when you drive by it, given the
100%.
factor of like certain states have other guidelines and they didn't do as well, and the numbers are showing it. But overall, retail did better than what was expected.
But I still think for brick and mortar, there's going to be a lot of positivity. I think there was also a lot of harder experience shipping things via FedEx and UPS. I think that, coupled with people potentially not getting those things on time, so going to the store and then sending that back as a return, whatever they were going to get, I think that had massive impacts, massive positive impacts. On top of the FedEx, I don't remember the FedEx story too, where the guy tossed all the products in the ravine. So how many Christmas gifts were in there? But I think you look at shipping, it's been very bogged down. So I want to say that brick and mortar probably had a very positive year just from what I've seen. I completely agree with you and understand looking at it from the perspective of where we live. But I still think you had people who probably ordered online, went to the store, they put it in their car, they drove off. I still think, honestly, think that this has given a revival potentially. And I say that half-heartedly only because you never know, but it gives a revival to brick and mortar because of the unreliable nature of logistics right now. And also, Amazon gave everyone that perspective of 2-day shipping. I order it, I click that button, and 2 days from now, it's going to be there. And a lot of companies, including Amazon, have struggled to make that happen. And so people will be discouraged from ordering necessarily there because the convenience that they had is gone, or is dwindling, I should say. So I could see people starting to push more towards brick and mortar. So the two that I'm really interested in, and I had Macy's and dropped it actually to get BLNK, but we'll actually be looking to get back into Macy's. but also Best Buy, I think, is a good option here with the Q4 results coming out here in a couple of months.
There you go. All right, let's go into final thoughts. I'll go first. We'll let you have the last word. You're the guest.
I get first word and last word.
I know, right?
Man, I feel
we treat our guests right on this show. Thank you. What I'm looking at, guys, is buying RIG below $3 for a day trade only, and it's only in the next couple of weeks. RIG below $3 for a day trade next couple of weeks. One thing I'm looking at for 2022, because they signed a ton of contracts in Q4 of this year, was KULR, KULR. Their stock prices, last time I checked, at $295. You know, again, last time I hit 288, I said back up the trucks, load everything, got into it. It went up to 321. Am I thinking we're going to have that same kind of turnaround right now? No, but below $3, it's a great buy, great steal. The company is going to go up. I know there was some insider trading in the past week. However, when you look at those selling of shares, these CEOs were selling maybe 20, 30,000 shares when they own 22 million. You have to understand, sometimes you do get to offload a little bit and enjoy some of the fruits of that stock price going up as much as it has been. So that's, as long as they're not unloading 20 million, I'm okay with just 20, 30,000 shares being unloaded pre-Christmas so they could buy their kids something or do a family trip. KULR, I'm not worried about it. I think it's still a great long-term play. Next year should be a great year, especially Q1 earnings. We should see a jump in Q1 earnings based off just the contracts alone they've been signing. That we saw they moved from 750,000 in revenue to millions of revenue. We should see tens of millions in revenue here soon, and then hundreds of millions in revenue. This company is continuing to grow, to continue to sign contracts. Keep an eye on them. That's all I got from my final word. Nick, final word.
All right. To wrap it up, I think to follow up on yours, 2022, I think it's going to be a lot of turbulence. So batten down the hatches, keep an eye out, a weather eye on the horizon, some might say, and let's just keep an open mind as you go through it. Brick and mortar stores, again, Macy's and Best Buy, I think are both good options. Q4 results, I think, will be a very strong positive. So definitely keep an eye out for those. And the oldie but goodie, BLNK. I think BLNK's going to have a good future here through 2022 and 2023. So just keep an eye out there, guys, for BLNK, BLNK, Macy's, and Best Buy. So Dave, it's been a pleasure coming back. Really glad to be here. If you call anytime, I'll always be happy to come back on the show.
And we appreciate it, man. We love you on the show. You're a great guest and you have a lot of good insights. So we appreciate that as well. As always, guys, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.